Trading might look glamorous from the outside, but the reality is often harsh and unforgiving. It's a deep psychological challenge. In this video, I will break down the 10 brutal truths about trading psychology that most people only realize after years of suffering painful losses. These are the truths I wish I knew when I first started. If you are able to take them head-on, you will avoid the common traps, improve your mindset, and become a more disciplined, successful trader. Number 1. You will lose more than you win, and that's okay. When I first stepped into the chaotic world of trading, the thrill was unlike anything I'd ever felt before. My initial forays into the market were punctuated by a string of lucky wins. It felt like the universe was handing me profits on a silver platter, and I began to believe that I had somehow cracked the code. The numbers in my account swelled, and with them, so did my confidence. I figured this thing out, I thought to myself, feeling invincible. But then, the tide shifted. Slowly at first, then all at once. The losses began to pile up. One trade after another crumbled. I was bewildered, almost in shock. My internal monologue screamed, "What am I doing wrong?" The euphoria of winning quickly turned to despair. And here's the hard truth that took me years of trading to learn and internalize. In trading, losses are inevitable. Even the most seasoned traders lose more often than they win. The secret isn't in avoiding losses entirely. It's about how you manage them. Successful traders know how to minimize damage, preserve their capital, long enough for their wins to outweigh their losses. Once I embraced the idea that losses were part of the game, my mindset changed. Trading became a calculated pursuit rather than an emotional roller coaster. But accepting losses in trading without emotions is easier said than done. This brings me to the second truth I wish I knew when I started trading. Number 2. You can't avoid your emotions, but you can manage them. One day, I took a trade that was supposed to be a straightforward trade. The charts lined up, the technical indicators flashed green, and everything seemed to align perfectly. I entered the position with confidence, thinking I'd accounted for every variable. But then, almost immediately, the market shifted. Prices began to move against me, slowly at first, like a distant wave creeping toward the shore. The initial dip was nothing major, something that shouldn't make me emotional. Yet, instead of following my plan and cut my losses, I hesitated. I could feel the first stirrings of fear, a tightness in my chest, a growing sense of unease in the pit of my stomach. My heart started to race, and my palms felt clammy against the mouse. The market was moving away from me, inch by inch, but still I clung to the hope that it would turn. Just a little more time, I told myself. It has to reverse. Every second felt like an eternity as I watched the price action, each tick taking me further from my original entry point. That hope, irrational and desperate, was all-consuming. The thought of closing out the trade at a loss felt like admitting defeat, like I had personally failed. My ego whispered that the market would turn back in my favor if I just waited a little longer. My strategy, which had served me so well in calmer moments, was all but forgotten. I was no longer acting as a disciplined trader. I was now just a spectator, hoping against the inevitable tide. But the market doesn't care about hope. It continued its downward spiral, and what had started as a small, manageable loss grew into something much larger, something far more painful. When I finally snapped out of my paralysis and closed the trade, the damage was done. The numbers on the screen told the story. My account had taken a hit far greater than it should have, and all because I let fear dictate my actions. In that moment, I realized something fundamental. You can't avoid emotions in trading, no matter how experienced you become. Fear, greed, hope, they're part of the human condition, and they follow you into every trade you take. But what separates successful traders from the rest isn't the absence of these emotions, it's how they handle them. And still on the topic of emotions in trading, this brings me to the next psychological truth I wish I knew when I started trading. Number 3. Greed will destroy your profits. I still remember that trade. It shot up 30% right after I opened the position. The rational part of me knew it was time to lock in those gains, but greed whispered in my ear, "Why stop now? It's going to hit 100%. So I held on, convinced that the ride would continue. But as the pair peaked and started to drop, I stubbornly clung to it, waiting for that elusive 100%. By the time I finally sold, my once glorious 30% profit had turned into a dismal 50% loss. Greed is a poison that clouds judgment and overrides rational decision-making. It pushes you to ignore your own plan, convincing you that there's always more to gain. But in the end, it often leads to losses. Trading isn't about squeezing every last dollar from every move. It's about making consistent, disciplined profits over time. And if you let greed dictate your trades, you'll end up giving those profits right back to the market. Emotions like greed, fear, hope are an unavoidable part of trading, but you can learn to manage them. To learn how to manage your emotions like the pros do, there's a video linked in the description of this video. Number 4. Patience is the most underrated skill in trading. I had been watching a forex pair closely for days, waiting for it to hit my carefully calculated entry point. Every time it came close, it bounced back, teasing me but never quite reaching my target. As the days passed, impatience began to gnaw at me. What if it rallies without me? I thought. The fear of missing out crept in, and soon enough, I abandoned my strategy, jumping in early. The moment I entered, the pair dropped, wiping out my position and hitting my stop loss almost immediately. I was stopped out for a loss, and not long after, it hit my original entry point before rallying just as I had anticipated. If I had waited just a little longer, the trade would have played out perfectly. But my impatience had cost me both financially and emotionally. In trading, impatience can be far more damaging than a bad setup. Most losses don't come from poor analysis. They come from traders acting too soon, driven by the fear of missing out. Successful trading requires the discipline to wait for the right setups, even when the market tempts you to act. Patience isn't just about timing. It's about improving your risk-reward ratio and making decisions based on logic, not emotion. The market is always in motion, constantly offering opportunities, but jumping in too early often means entering when the odds are not in your favor. When you wait for the ideal setup, you position yourself to trade with more confidence and less regret. Patience allows you to avoid unnecessary losses, keeps your emotions in check, and ensures that you are trading from a place of control, rather than reacting impulsively to market fluctuations. The truth is the market rewards those who can wait. Patience isn't just a virtue in trading, it's essential for long-term success. 5. Your ego is your worst enemy. Learn to admit you're wrong. It was supposed to be just another trade, one of many I'd executed with the same calm confidence. But almost immediately after I entered, the market took a sharp turn in the wrong direction. But I didn't panic, I told myself. This is just noise. After all, I had done my analysis. I had seen this pattern before. But as the minutes turned into hours, and the small dip became a full-blown plunge, the voice of reason whispered that I should cut my losses and move on. But another voice, louder and more insistent, drowned it out. This voice was saying, "You can't be wrong. You've done the work. The market will turn." In reality, that voice wasn't logic. It was my ego. It refused to let me acknowledge the fact that I had misread the situation. Admitting I was wrong felt like admitting I was incompetent. At that point, I wasn't just holding on to the trade, I was holding on to my pride. Ego is a trader's greatest enemy. It blinds you to reality, making it impossible to admit when you're wrong. The most successful traders are those who can accept their mistakes quickly, without hesitation. Holding on to a losing trade because your pride won't let you admit defeat is a fast track to disaster. The market doesn't care about your ego. It will punish your arrogance without mercy. The market will humble you, no matter how good you think you are. It doesn't care about your past wins or how much research you've done. The sooner you let go of the need to be right, the sooner you'll find success. Admitting you're wrong isn't a failure. It's a survival skill in the unforgiving world of trading. 6. Overtrading will drain your account and energy. Early in my trading journey, I was consumed by the belief that to be a successful trader, I needed to constantly be in the market. I thought that every minute spent without an active trade was a missed opportunity. The idea of sitting on the sidelines felt like wasted time, and I couldn't shake the feeling that the market was always offering something I might miss. This led me to overtrade, constantly jumping into trades, looking for any hint of profit. Every small fluctuation in price felt like an opportunity that I needed to seize. At first, it seemed harmless enough. Some trades worked, others didn't, but I told myself that staying active was the key to success. However, I began to notice that my account wasn't growing the way I had expected. What I didn't realize at the time was that those frequent impulsive trades, those small losses, were adding up. Each trade, even the ones that didn't seem too damaging individually, contributed to the gradual erosion of my account. Overtrading is a trap many traders fall into, and I was no exception. No trader is. The emotional toll was equally draining. The constant need to be in the market wore me down mentally. I was always on edge, always analyzing, always searching for the next trade. The pressure to stay active clouded my judgment, and I found myself making decisions out of frustration or boredom rather than logic and strategy. I eventually learned that trading isn't about being in the market all the time, that it is about waiting for the right moments. It took me time to realize that fewer, higher quality trades are far more valuable than a constant stream of poorly timed ones. The best traders aren't always the most active ones, they're the most patient. Number 7. Your trading style is unique. In my early trading days, I believed that copying the strategies of successful traders would guarantee my success. I studied various strategies, thinking that if it worked for them, it would work for me. What I eventually learned is that trading isn't a one-size-fits-all endeavor. The strategies I mimicked didn't fit my personality or risk tolerance, and it only leads to frustration and unnecessary losses. For example, scalping, a fast-paced style requiring constant attention, left me feeling anxious and overwhelmed. I struggled to keep up with the speed, and my impulsive decisions often led to losses. It became clear that my problem wasn't the strategies themselves, but that I was forcing myself into methods that didn't align with my natural tendencies. Trading success depends on finding a style that suits your personality. If you thrive under pressure and enjoy quick decision-making, day trading or scalping might work. But if you're more methodical and patient, swing or position trading may be a better fit. I realized that my sweet spot was a mix of intraday and swing trading, where I could hold positions long enough to think strategically without feeling rushed, and manage my risk in a way that didn't keep me up at night. In the end, the most successful traders aren't the ones who blindly follow another person's strategy. They are the ones who develop a system that fits their personality, lifestyle, and risk tolerance. Find a strategy that aligns with who you are, and you'll trade with greater confidence and consistency. 8. The market doesn't care about your feelings. Stop taking it personally. There was a time when I genuinely believed that the market had a personal vendetta against me. Every time I entered a trade, it felt as if the market shifted just to spike me. I'd place a position, and like clockwork, the price would reverse the moment I hit buy. It became so frequent that I entertained the absurd thought that some malevolent force was tracking my every move, making a mockery of my decisions. The brutal reality, though, is this. The market doesn't care about me, or you, or anyone. It's an indifferent beast, driven by forces far beyond any individual's control. When I stopped taking every loss personally, when I realized that those losses weren't a personal attack, that they were just part of the game, I also stopped falling into the trap of revenge trading. The market isn't out to get you. It's not there to reward you either. It's neutral, and it's up to you to react with calm, rational strategy. Once I accepted this truth, I began trading with more clarity and far less frustration. Number 9. No trade is ever a sure thing. Embrace the uncertainty. There was one trade I was absolutely sure about. The chart was perfect, the fundamentals solid, and everything seemed lined up for a massive win. So, I bet big, convinced that I found a sure thing. But instead of soaring, the market reversed, and I was left reeling. There's no such thing as a sure thing in trading. The market is unpredictable, and the moment you think you found a guaranteed win is the moment you're most vulnerable. Every trade carries risk, and the best traders are those who manage that risk with care. Always expect the unexpected, and never let yourself believe that any trade is a certainty. Number 10. It takes time. Like many, I had visions of fast success as a trader, making huge profits within weeks, perhaps even days. I imagined that if I could just learn the right strategies, I'd be well on my way to building massive wealth. But reality hit hard and fast. The truth is, trading is not a get-rich-quick scheme. It's a long-term game that requires patience, persistence, and a willingness to learn from your mistakes. Like many beginners, I was eager to see immediate results. I entered the market expecting my early trades to yield significant returns, thinking I could outsmart the market with a few key moves. But what I quickly learned is that success in trading doesn't happen overnight. There are no shortcuts. The early stages are filled with losses, mistakes, and lessons learned the hard way. One of the most important realizations I had was that the market is constantly changing. What works in one situation might not work in another, and it takes time to develop the experience needed to adapt. This process of learning, testing, and refining strategies takes time. Time that's often much longer than you anticipate. The key is to view trading as a marathon, not a sprint. It's about gradually building your skills and understanding over time. The most successful traders aren't the ones who make quick, flashy gains, but those who steadily improve and consistently grow their account over months and years. Another lesson is that consistency beats speed. The market rewards those who are patient, who stick to their strategies, and who understand that losses are part of the process. The traders who endure are the ones who recognize that trading is about long-term growth, not instant wealth. So, if you're new to trading, embrace the journey. Understand that it takes time to develop the necessary skills, patience to ride out the inevitable ups and downs, and persistence to keep learning. The rewards will come, but they come to those who are in it for the long haul. Trading isn't easy, but when you master these mindsets, you are giving yourself a real edge. Remember, the mental game is just as important as the technical. Before you go, I will recommend you take this test to find out who you truly are, a trader or a gambler. Click the linked video to find out. If you found this video helpful, don't forget to like, share, and subscribe for more valuable trading tips and insights. Thanks for watching.